You got your paycheck, you saw the final number, and for one beautiful second you thought the bank made a mistake in your favor. It didn't reach. That giant gap between what you earned and what actually landed in your account has a name, and the name is taxes. You've been quietly funding entire governments your whole life and you still can't explain how. So let's fix that, in words even your goldfish brain can follow. Here's the first thing you have to get through your skull. There are two numbers on every paycheck, the big one you earned and the smaller one you actually get. The big one is called gross pay. The smaller, sadder one is net pay, also lovingly called take home. Everything sliced off in between got taken before your greedy little hands ever touched it. The government is basically a silent business partner you never agreed to, and he takes his cut off the top, before you even see the money. Smart of him. Bad for you. That slicing off is called withholding, and it's the sneakiest trick in the whole system. Your employer estimates the tax you'll owe and mails it straight to the government out of every single paycheck automatically all year long. Why? Because if the government waited and asked you, a broke man with the impulse control of a toddler, to hand over a giant pile of tax once a year, you would spend it on a jet ski and have nothing left. They take it before you can be a moron with it. It's honestly a compliment to how untrustworthy you are with money. Now, where does it go before you get all patriotic and angry? Your taxes pay for the boring stuff you'd scream about if it vanished. Roads, schools, the military, courts, and programs that mail checks to people who can't work. Some of it funds things you'll use, some of it funds things you never will, and a chunk of it just pays interest on the government's own colossal debt. So yes, a slice of your paycheck goes to pay off money the government borrowed before you were even born. You inherited the bill and the confusion, and you're handling both about as well as I expected. Okay, now the big one. The single dumbest myth that lives rent-free in your tiny brain. The tax brackets. Almost everyone, including you, thinks that if you get a raise and it bumps you into a higher tax bracket, your whole income suddenly gets taxed at that higher rate, and you somehow take home less. That is wrong. Completely, embarrassingly wrong. And it's why some idiot at your job literally turned down a raise once, thinking it would cost him money. Here's how it actually works, so grip your crayon. The tax system is like a set of buckets. The first chunk of your income gets taxed at a low rate. Only the money above a certain line gets taxed at the next rate up, and only the money above the next line gets taxed even higher. So a raise pushing you into the next bracket only means the extra dollars over that line get taxed more. Every dollar below it is taxed exactly the same as before. You never lose money by earning more, A raise is always more money in your pocket. Say it back to me slowly so it sticks. This is what they mean by your marginal rate versus your effective rate. Your marginal rate is the tax on your last, highest dollar. Your effective rate is the actual average across all your income, and it's always lower than the scary top number. So when you hear, the top tax bracket is 37%, and you panic, relax. Almost nobody pays that on their whole income. Definitely not you, brokey. You're not clearing that kind of money, and we both know it. Now, income tax isn't even the only hand in your pocket. There's a second one called payroll tax, and it funds Social Security and Medicare, the programs that are supposed to keep you from starving when you're old. This comes straight out of your check too, separate from income tax, and your employer secretly matches part of it. So the true cost of employing you is higher than your salary, you just never see that part. There's a whole invisible tax happening around you, and you thought your only enemy was the one line you could see. Adorable. And the taxes don't stop when you leave work, genius. Buy almost anything, and there's sales tax bolted onto the price. Own a house, and there's property tax every year. Some states even take another bite of income on top of the federal one. You are being taxed when you earn it, taxed when you spend it, and taxed when you own things. The money gets hit coming and going, like a piñata at a party you weren't invited to. Now, everything I just said assumes you're a normal employee with a boss and a steady paycheck. But the second you make money on the side, freelancing, gig work, selling junk online, nobody is withholding taxes for you. You get the whole amount, untouched, and it feels incredible. It's a trap. That tax didn't vanish, it's just sitting there waiting, and if you spent all of it, which you did, you now owe the government a pile of money you no longer physically have. That's why self-employed people are supposed to pay estimated taxes every few months, setting the money aside themselves, like a grown adult. Which means the whole system now hinges on your discipline, brokey. We are all doomed. But before you cry, the system does hand you some ways to legally pay less. The main one is the deduction. A deduction lowers the amount of your income that can be taxed in the first place. Almost everyone automatically gets a big freebie called the standard deduction, which just chops a set amount off your taxable income, no effort required. That's a chunk of your money the government agrees not to touch. It's basically free, and yet I guarantee half of you don't know it exists, which tells me everything about how you handle the rest of your life. Then there are credits, and you need to know the difference, so pay attention. A deduction lowers the income you get taxed on. A credit lowers the tax bill itself, dollar for dollar. A $1,000 credit knocks a full $1,000 off what you owe. That's stronger than a deduction of the same size. Credits are the good stuff. I know, deduction and credit sound like the same word to you, the way left and right apparently do. They are not. Now let me destroy your favorite day of the year, the tax refund. You think the refund is the government being generous, a little gift, free money falling from the sky? It is not. A refund means you overpaid your taxes all year, and they're just giving your own money back. You handed the government an interest-free loan for 12 months and got zero back for it. You're not winning, brokey. You're celebrating getting change back from a cashier you tipped by accident. A big refund means you were bad at math all year. On brand. Here's how a person with a functioning brain actually fights back. Legally, the move is to lower your taxable income on purpose, using accounts the government blesses. Put money into a retirement account like a 401k, and in many cases, that money isn't taxed today, so your tax bill shrinks right now. You're not dodging taxes. You're using the exact levers they built into the system. The rich aren't cheating, mostly. They just actually read the rules you were too lazy to open. The instructions were right there, they always are. But know the one line you never cross. Legally lowering your taxes with deductions, credits, and blessed accounts is called tax avoidance, and it's completely fine. Encouraged, even. The whole system is built with those levers on purpose. Lying about your income, hiding money, and just not paying is called tax evasion, and that one comes with fines and handcuffs. Avoidance is playing the game well. Evasion is flipping the board and going to prison. The rich use avoidance. You, left to your own devices, would sprint face first into evasion and get caught inside a week, because subtlety was never your thing. And the second you start actually investing, like a functioning adult, congratulations, you unlock a brand new tax. When you sell an investment for a profit, the government taxes that gain too. It's called capital gains tax. But here's the part they don't put on a billboard. If you hold that investment for more than a year before selling, the profit usually gets taxed at a lower rate than your regular paycheck. So the system literally rewards you for being patient, which is exactly why you keep losing to it. Hold for a year, pay less. Flip it in a week like a twitchy brokey, pay full freight. Let me undercut this before you get a big head. Knowing how taxes work will not make you rich, and it will not make filing them fun. The system is deliberately confusing, partly so you'll pay someone to do it for you. But at least now you won't turn down a raise, you won't worship your refund like a lottery win, and you won't think a whole paycheck vanished into a bracket. That's a shockingly low bar, and yet this morning you were somehow under it. So the next time you stare at that gap between what you earned and what you got, you'll actually understand it. Gross versus net, withholding, brackets that only tax the top slice, deductions, credits, and a refund that was your own money the whole time. You started the video thinking the bank robbed you. Turns out it was the government, it was legal, and you signed up for it with a smile. Welcome to being an adult, retard. The mistake was thinking that number at the top was ever really yours.